Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanige. My guest today is Anthony Labozzetta. He is the CEO of Provident Bank. Tony, welcome back.
Thank you.
The last time we spoke was a while ago, was right around the time that Provident's deal with SB1 Bank closed. That's how you joined Provident, if I recall correctly. A lot's happened since then, most prominently the acquisition Lakeland Bank, which created a very significant regional bank in New Jersey. At least that's my characterization. I'm going to ask you how you view that. I am curious about how you would describe what Provident has become over the last few years and where you see the bank's role in A, the financial services industry, and then B, the economy general. What is Provident Bank these days?
Well, I like to think that, private bank is a little bit of its historical essence in a new body, if you will, the new body being the size and scale.
Right.
We are a super community bank today. That's kind of how I would describe it. And the reason I use the term community is because we deliver our services to our customers, the experience in a very community bank minded way, which means high touch. Creating advocates for life is in our vision statement. So those things are critical. But the reason I say it's a new body is because the scale creates, the capacity, the capital to do things. We could have more verticals that you couldn't have as a small bank. For instance, we have asset-based lending. We can have mortgage warehouse lending. We could have high-level treasury management, enhanced digital platforms. We have an insurance platform. We have a wealth platform. All of these verticals are meaningful. They're not just hobbies. They're important delivery channels for us. And that's what you get when you when you have the scale of a super community bank, but done in such a fashion, as I mentioned earlier, where the customer centricity and high touch is really important for us.
Okay, well, that's what sort of was getting to, because I think what most business people, when they think of community bank, they think of that kind of high touch, that personal relationship, the banker who's knows the community very well, knows the businesses, knows their clients very well, and as opposed to, say, a money center bank, which is based in Manhattan or somewhere where it's a faceless monolith. But you've been able to. What I hear you saying is that you think you've been able to sort of walk that line, as it were, to become a bigger bank, but yet still have the same kind of focus on the community.
Well, that's absolutely true. And that's not only in our vision statement, but it's in our mission statement. That's what we do every day, right? So, and we aligned our reporting responsibilities in that fashion where we're regionalized. And so people are making decisions at the local level. We empower them so they know what's happening on the ground in the community and they can make those decisions. They don't have to come back to Islin or some corporate office. And I think that's really impactful for the way our clients get served.
Okay. And you mentioned those verticals. Are there going to be more? I mean, where the obvious question for what Provident Bank has become, where do you go from here? What are your priorities now as you look to the future?
Well, I think we're super positioned. I mean, we're incredibly well positioned to accomplish our strategic objectives, right? So I would first say organic growth is our primary strategy as we move forward.
Mm-hmm.
So we have all these verticals, but they have to meet some scaling, right? So we want to continue to grow our commercial and industrial business, our C&I business. So whether it's healthcare, whether it's asset-based or SBA, all of those verticals, we have a lot of room and capacity for growth. So that's our focus. Middle market lending business is going to be a critical focus for us as we move into the next several years. So it's really, we've sort of put the bank in a position where we brought in talent, capabilities, and now it's maximizing those potentials. And I think that's going to create a lot of value, not only for Provident Bank, but for the communities we service over the next 3 to 5 years.
Okay. So, well, you mentioned organic growth and middle market. Are more acquisitions in the future, do you think?
Well, I would say I would characterize if we accomplish the things that I mentioned, the organic growth and that's the best acquisition we can do, right? Because that's growing your institution in a way that delivers the most value to the franchise. That said, we also We'll look at some strategic opportunities. We always evaluate those that are great cultural compatibilities, provide some strategic purpose or market expansion. I think we would look at those opportunities, but first and foremost, we have to be able to grow organically and build on what we've put in place,
Okay.
or also to just be masking the situation.
All right. I asked that because there was a time when the banking industry, particularly community banks, smaller banks, was consolidating fairly quickly. My sense is that that slowed down a lot in the past year or so, or maybe more than that. Is that, or do you feel the same way? Are you seeing the same thing? Is that dynamic still out there?
Well, I think the environment several years back was a little different than it is today. I think the potential for mergers and acquisitions today is heightened,
Okay.
for a number of reasons. One, you're starting to see interest rates moving in a place that's more favorable, so the accounting around mergers is getting a little bit better. Regulatory environment around the mergers has been streamlined, so you've seen some of the mergers that recently got announced get approvals quicker.
Right.
So I think you will see a pickup in the mergers and acquisition space. Um, but I would also characterize it as, 10 years ago, there was just a lot more, many more banks out there that could combine. And so the universe of banks is also shrinking. So there's a lot less opportunities, but I still expect to see M&A move quicker over the next 12 months.
Okay, so yeah, that actually was the sense, and talking to some of your peers as well, that there was this consolidation. There just aren't that many targets out there now. I mean, a lot
Right.
of them have become fairly large, like you. So
Right.
that's a different kind of deal altogether. Yes.
Hmm. Yeah, and that's absolutely true that it's not only finding the numbers, it's finding the compatibilities, right? And this, because when you look at mergers, they have a number of different value sets, right? Whether you're combining two good cultures. When we did the Lakeland merger, we brought in certain disciplines that we didn't have, right? Like
Right.
the ABL and healthcare. When we did the SB1 merger, we brought insurance, we brought other capabilities. So there's always something that is strategic to the M&A, and it has to have compatible cultures. And I still think there's some wonderful banks that are out there, but today is a time where people are evaluating strategy. It's a good environment for M&A, so you have to
Right.
consider it.
Okay. All right. Um, so I'm curious then, what's driving the industry right now, the financial services industry in particular? You mentioned the middle market. I think around the time of the Lakeland Bank deal, you also mentioned commercial real estate. Obviously, that's a huge driver of the market, the economy in New Jersey. Is that where the focus is now, or I don't want to put words in your mouth? Where do you see the most opportunities at this point?
Well, I think for us, the most opportunities will be in the way we've set our organizational capacity to continue to grow organically in all of those verticals. We've been a fantastic CRE lender, commercial real estate, for many, many years, and I think that's one of our ultimate strengths. We get really good points from everybody that evaluates that sector and relative to Provident.
Mhm.
So I would say we'll continue to build that channel.
Okay.
Um, but I think the greatest opportunities for us will be more in the middle market space and building those other verticals that I mentioned, which will complement the commercial real estate space and give us a more diversified commercial loan portfolio. So I think that is the greatest opportunity. And New Jersey is still the metropolitan area, Eastern Pennsylvania affords a lot of those opportunities for us.
Certainly. Okay. Very good. That leads to the question about your assessment of the interest rate environment. Last week, the Fed approved a second consecutive rate cut. There had been suggestions of a third one this year, although I think Chairman Powell seemed to walk that back a little bit in his remarks after the FOMC meeting. How do you view the interest rate environment now? How does all of that will affect the bank in particular, the economy in general? What should business people know about interest rates right now?
Well, what they should know is that I can't predict them, right? So,
Okay.
but I think
One of these
I,
days, someone is going to come on and say, "Yes, I can predict exactly what the Fed is going to do." Here you go. But
exactly.
okay,
What I can tell you is what we modeled, and we modeled one rate cut,
okay,
right? So if the second one happens for the remainder of the year, that'll be further than our model has taken us. We're re-evaluating it now. Um, Obviously, we're looking at a number of factors closely. What's happening with GDP? We're looking at employment. We're looking at consumer behavior. All of those things will be drivers. Our customers' behavior relative to their demands for credit, the demands for credit for the right reasons, such as investing in plant facilities and expanding your business, or they, to meet other needs. So far, I will tell you, we do a survey every June. The survey told us a number of things, and this is back in June. There was a lot more anxiety relative to the tariffs, relative to more geopolitical events. The unknowns and the anxiety were driving certain behavioral and expectations and commentary.
Mm-hmm.
I think that's evolved down the road to, yeah, there's still some anxiety, there's still some, careful thinking, but we're seeing a lot of activity. Provident has one of the largest loan pipelines in its history right now, and so we're seeing the customer demand. I think the items that I mentioned earlier, paying close attention to what's happening with unemployment, consumer behavior, and how that might kind of be a lagging effect. I think that's more the things that I would pay attention to. Certainly, as interest rates decline, you'll see more investment in either commercial real estate, maybe construction, and maybe into other spaces than you did in the past 18 months.
Okay, well, you actually anticipated the next question was when you look at those things, when you look at consumer behavior, what do you see? Are you seeing confidence? Are you seeing, again, continued uncertainty? It sounds like you were seeing that, but what I hear you saying is that you think that that's abated a little bit, and that consumers are getting more confident, and the economy in general looks like it's going to head up at this point.
Well, I think it's mixed, right? I think you start to see things, but you get multiple fact points, right? You hear data on automotive, repossessing rates. One of the things that I would say we pay attention to is what clients actually tell us.
Yeah.
Our clients needing relief, with the government shutdown. We're ready to be responsive to our client needs, but we haven't gotten demands for any relief at this point, whether it's consumer or business. So that's a good sign. Don't know what it might look like if it's a protracted government shutdown, 12 month, another month from now or so. But I think there's a combined level of anxiety versus people do believe that things might be moving in the right direction.
Okay, but that's as I was also curious about what you were hearing from clients. Exactly that. Are most people focused on Washington? I mean, we have a gubernatorial election coming up like tomorrow in New Jersey. The voting's been going on for a week. Are they concerned about that too? I mean, what do you hear when you talk to clients about
Well,
how they assess the economy?
there's a ton of opinions. Obviously, they're concerned about the election at the state level and local levels because that impacts them more in New Jersey. But then
Right.
our Pennsylvania clients may don't have that, or in New York presents a different scenario. So I think everybody's cognizant and a heightened level of awareness, but I think their plans are to how do we react to the situations as they unfold. And at Provident, we have a strong balance sheet. We're there. We communicate with them regularly, and we're ready to respond if they need to move in direction A or direction B. We're there for them.
Okay. I also I have to ask you about technology. I know it's changing basically every industry. It's particularly artificial intelligence. Where's Provident? What are the most? I was going to just ask a general question, but I'll ask sort of more specifically. What do you think the most significant technological developments have been over the past few years, specifically in terms of Provident and your operations? What are you using now that you weren't able before, and how does that help?
Well, I think one of the things that we're paying more attention to now than we were a couple of years ago is the AI, right? I think a year or so ago we were more in the evaluation phases. Now we're in which elements are we in implementation mode. So a lot of things that you'll be seeing from us will center around the client or the employee experience, how we can change that continuum to move. And I'm a huge proponent of this because I've we've all been searching for this for many years. How do we change the lives of our employees, remove the mundane processes, remove the friction, and have them change their job functionalities from task orientation to being stewards of the customer experience in that segment of their journey. And I think AI is going to be a huge player for us in that space, and that's going to be wonderful because the clients will be able to get service quicker, better, how they want it. Other areas that you can see is perhaps the fraud space. The AI can help us with more learnings, more capabilities, because we do know that the people that commit the frauds, they're very sophisticated, and they're going to use AI as a tool to continue to attack financial institutions. And we just have to work hard using the same tools to stay a step or two ahead of them, or at least on pace with them.
All right. So AI is a part of what you're doing at the bank
Yeah.
now. You're
Yeah.
integrating it into your systems. Yes.
Yeah, I go back to the first point that I mentioned, at Provident and how we look at AI. Sort of, if you look at the overarching principle, would probably be AI is not going to replace client relationships.
Hmm.
We're going to use it to help us deliver better client experience, but it's still a human. Like, I can't come up and say we're going to have a community bank model and then have AI handle, right? So
Right.
we want to
Right.
use AI to help the process, not to take over the process.
Right. And that's a very common attitude that yes, AI can help you, it can manage, it can help you deal with huge amounts of data much more quickly than any person can, but you still need to have that human element. And I'm imagining in an industry like banking, which is so dependent on relationships, that has to be at the forefront. Yes.
It's our strategic vision.
Right. Okay. All right. Before I let you go, I'm just curious as to what you think about where the bank is now and where it's going over the next the medium term, the next 6 to 12 months. Say, what are you anticipating? What keeps you up at night? Where do you think you're going to be working on? What are you going to be working on over the next, say, 6 to 12 months?
Well, I'm fortunate to have put together an incredible executive team, right? So watching this group execute on some of our strategies is going to be exciting over the next
Okay.
12 months. I think the key areas of focus, as I mentioned, are going to be a lot of our strategic or organic growth strategies that we put in place. Some of that could include some expansion into Pennsylvania a little bit deeper,
Okay.
expansion into the New York, Westchester, other parts of the metro area that we're not deeply in.
Okay.
Um, we talked about M&A earlier, if that presents itself, but I think a lot of this is to continue to grow our bank responsibly. We've spent a lot of time and energy putting together capabilities that are more that align with an institution of our size relative to operational risk, credit risk, all the things that we need to do. It's a much larger institution, so you
Yeah.
have to have the risk paradigm in place to be able to manage it well. And we're committed to that. So continuing to build our infrastructure a lot more on data and continuing to expand and grow organically is our primary focus.
Okay. Well, we'll be watching for all of that, and I hope you'll come back at some point and tell us how it's going.
Love to do that. Thank you so much for your time.
Great. Tony Labozzetta, CEO of Provident Bank, thanks for your time. I appreciate it.
Very good.
And thank
Bye.
you for watching. Until next time, stay safe, everyone.